Have you ever wondered what it looks like when governments quietly prepare for something the rest of us can't see? Because right now, some of the world's wealthiest nations are doing exactly that. Singapore is stockpiling gold at record speed. Switzerland, known for its neutrality, is fortifying its reserves like never before. Norway has built the largest sovereign wealth fund in history, and they're doing it quietly. No headlines, no announcements, just action. But here's what 90% of people don't know. They're not just preparing for a recession. They're preparing for something far bigger, a shift so fundamental that it could reshape the entire global financial system. So stay until the end, because what these countries know and what they're doing about it could change everything you thought you knew about the global economy. Leave a like and let's dive in. For decades, the global economy ran on a simple system: trust the U.S. dollar, hold U.S. Treasury bonds, and keep reserves in cash. That was the playbook. That was the standard. But in the last 3 years, something fundamental has shifted. The dollar's share of global foreign exchange reserves has dropped from 70% in 2000 to just 57.8% in 2024. This isn't just a statistical blip. It's a vote of no confidence. And here's the part that should terrify you. Central banks are buying gold at a pace we haven't seen in decades. In 2024 alone, they purchased over 1,044 tons of gold. That's the third year in a row they've crossed the 1,000-ton mark. Between 2022 and 2024, central banks bought a combined 3,220 tons of gold. That's double what they bought between 2014 and 2016. Why? Because gold doesn't default. It doesn't rely on a government's promise. It doesn't disappear when interest rates spike or when a currency collapses. It's the only asset that has survived every financial crisis in history. When the people who print money start hoarding gold, that tells you everything you need to know. But it's not just gold. It's what the gold represents, a fundamental loss of trust in the system. Take China, for example. In 2013, they held $1.317 trillion in U.S. Treasury bonds. Today, that number has dropped to $730 billion. That's a 45% reduction. And it's not just China. Look at the BRICS nations. In 2024, 90% of Russia's trade within BRICS was conducted in local currencies, bypassing the dollar entirely. You might be thinking, so what? China's just diversifying. But this isn't diversification. This is a coordinated exit. This is the world's largest economies quietly building escape routes from a system they no longer trust. So while the headlines tell you everything is fine, the smartest money in the world is quietly moving. Let's start with Singapore, a tiny city-state with no natural resources, no oil, no farmland, just brains and strategy. And right now, Singapore holds the largest gold reserves in Southeast Asia. As of the third quarter of 2025, they have 204.71 tons of gold, ranking 22nd globally. That's the highest it's been since independence in 1965. And here's what makes it even more remarkable. Back in the first quarter of 2023, Singapore bought 68.68 tons of gold in a single quarter, making them the largest gold buyer in the world during that period. And here's what's interesting. Singapore hasn't stopped. Even as gold prices hit record highs, they keep buying. When a country that built its wealth on financial intelligence starts hoarding gold, you pay attention. But gold is just one piece. Singapore has something most countries don't. Two of the world's largest sovereign wealth funds. GIC manages around $744 billion in assets. Temasek holds another $630 billion. Together, that's over $1.3 trillion for a country of just 6 million people. And in 2024, GIC made a telling move. They cut their exposure to nominal bonds and cash while increasing allocations to inflation-linked bonds and private equity. You might ask, why does that matter? Because it means Singapore isn't betting on the dollar staying stable. They're betting on real assets, things that hold value when currencies fail. They're not preparing for inflation. They're preparing for currency devaluation. And it's not just the government. The ultra-wealthy are catching on. From the start of the year to April 2025, private gold storage facilities in Singapore reported an 88% increase in orders to store gold and silver compared to the same period in 2024. Sales of physical gold bars jumped 200%. Think of it like this. If you saw your smartest, wealthiest neighbor quietly moving all their cash out of the bank and into a safe in their basement, you'd wonder what they know that you don't. That's exactly what's happening in Singapore. The country has earned a reputation as the Geneva of the East, a place known for political and economic stability. And when the world's wealthiest individuals start moving gold there, it's not because they're scared, it's because they're smart. Singapore isn't preparing for a rainy day. They're preparing for the storm. Now let's talk about Switzerland, the country that stayed neutral through two world wars, the place where dictators, billionaires, and central banks all park their money. Switzerland holds 1,039.94 tons of gold, ranking 7th in the world. But here's what makes it truly remarkable. Switzerland has the highest gold reserves per capita on the planet. Every Swiss citizen, on average, has 115.19 grams of gold backing them, worth about 3,948 euros per person. But here's what most people don't know. Switzerland's gold isn't just sitting in a vault, it's a national obsession. In 2014, something remarkable happened. Swiss citizens voted on a referendum about gold. The proposals were bold. First, all gold reserves must be held physically within Switzerland. Second, the central bank would be banned from selling any gold reserves. Third, at least 20% of the Swiss National Bank's assets must be held in gold. The referendum didn't pass, but the message was clear. Swiss citizens don't trust paper promises. They want hard assets. Imagine that. A country so wealthy, so stable, and yet its people are demanding more gold. Why? Because they've seen empires rise and fall. They know that currencies come and go, but gold remains. The Swiss lived through the collapse of multiple European currencies, through hyperinflation in neighboring Germany, through the rise and fall of entire monetary systems. They know what lasts. And Switzerland isn't just holding gold for itself, it's holding gold for everyone. The Swiss National Bank's vaults are considered one of the most secure places on earth. When even other countries don't trust keeping gold in their own vaults, where do they send it? Switzerland. So while the world talks about digital currencies and cashless societies, Switzerland is quietly reinforcing the oldest form of wealth humanity has ever known. If you found this valuable, smash that subscribe button and let me know in the comments which country surprises you the most. Now let's talk about Norway, a country of just 5.5 million people, and they have the largest sovereign wealth fund in the world. As of June 2025, Norway's government pension fund Global holds over $1.9 trillion. That's not a typo. Every single Norwegian citizen on paper is worth over $340,000 just from this fund alone. And in 2024, the fund posted a record profit of $222.4 billion. But here's the brilliant part, they're not spending it. Norway has a rule. They only withdraw 3% of the fund each year. The rest, it keeps growing. Imagine you had a goose that laid golden eggs. Would you kill it for one big meal, or would you take just enough eggs to survive and let it keep producing? That's what Norway is doing. While other countries burn through oil money, building monuments and funding short-term spending, Norway is building generational wealth. They're playing a different game. They're not asking, how much can we spend today? They're asking, how much can we leave for our children? They're not just preparing for the next crisis. They're preparing for the next century. And just like Singapore, Norway is moving away from traditional assets. The fund allocates roughly 70% to equities, 25% to bonds, and 5% to real estate. And since 2020, they've started investing in renewable energy infrastructure. The fund has also excluded over 200 companies from its portfolio for ethical violations, everything from environmental damage to human rights abuses. You might think, why does that matter? Because Norway knows that when the system breaks, paper assets vanish, real assets, land, infrastructure, energy, those survive. Norway isn't hoping for the best, they're building for the worst. So what about the United States, the world's largest economy? the issuer of the global reserve currency, the country that everyone assumes is too big to fail. The United States holds 8,133.46 tons of gold, the largest gold reserve in the world. But here's the thing, that number hasn't changed in decades. While China, India, Poland, and Singapore are buying gold like it's going out of style, the U.S. hasn't added a single ounce. The reserve has remained virtually unchanged for years, reflecting a strategic decision to rely on existing holdings rather than actively increasing reserves. You might say, well, they already have the most. True, but if gold is the ultimate safe haven, if it's the asset that survives every crisis, why aren't they buying more? And here's the real problem. The United States has no sovereign wealth fund. Zero. Nothing. Singapore has $1.3 trillion. Norway has $1.9 trillion. Even tiny Abu Dhabi has $700 billion. America, nothing. Why? Because America has always relied on one thing, the dominance of the dollar, and for decades that worked. The dollar was the reserve currency. Everyone held it. Everyone needed it. But what happens when the dollar is no longer the king? Right now, America is making a bet, a massive all-in bet that the dollar will remain the world's reserve currency forever. But the world is moving on, slowly, quietly, but surely. The dollar's share of global foreign exchange reserves has dropped from 70% in 2000 to 57.8% in 2024. Foreign ownership of U.S. Treasury bonds has fallen from a peak of over 50% during the financial crisis to just 30% in 2025. The foundation is cracking. So while Singapore builds vaults, Switzerland hoards gold, and Norway stacks trillions, America is doubling down on a system that's already showing cracks. It's not that America is unprepared, it's that America believes it doesn't need to prepare, and that might be the biggest risk of all. So let's bring it all together. Singapore is buying gold and building wealth funds. Switzerland is fortifying reserves and letting citizens vote on gold policy. Norway has $1.9 trillion sitting in a fortress, growing year after year. And the United States? It's betting everything on a dollar that the world is quietly abandoning. This isn't a conspiracy. This is a pattern. And patterns don't lie. The answer isn't fear. It's not about selling everything and moving to a bunker. It's about understanding the signal. When the smartest governments in the world, the ones with decades of financial expertise, start quietly shifting into hard assets, that's not paranoia. That's strategy. Those who see the signal won't be the ones caught off guard. They'll be the ones who prepared while everyone else ignored the warning signs. So here's the question you need to ask yourself. If countries are preparing for what's coming, shouldn't you? The signal is there. It's been flashing for years. The question is, will you ignore it or will you act? If this opened your eyes, hit that subscribe button and let me know in the comments what you think is coming next. See you in the next video.